Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Arijit Basu, former MD at State Bank of India and senior consultant at AZB Partners, joining in. Welcome to the show, Mr. Basu. And it's always a pleasure to speak to you and get insights from you. Uh, Mr. Basu, overall, we've spoken earlier as well that in the last 12 to 18 months, the major concern that we've been seeing is how the credit growth for the banking system actually pans out. Now, if you go to see, around 7% is what we are seeing. And it seems there is some bit of stickiness that has started to come in as well. What would you make of this number? And would you agree to the point, or do you think 7% is still very low versus what we should be at?
Right. Again, the credit growth, if you would recall, I had divided it into segments of the various sectors of the economy that reach out to the banks. And yes, 7% vis-a-vis the overall banking credit growth appears to be low, but there are some underlying stories in this. What the bankers say and what is reflected in their quarterly results. So we already have the second quarter results, and
Right.
third quarter will be ending this month. They are very, very comfortable and bullish on the retail side. And here retail definition, because each bank uses its own definition. Here by retail, I mean the individual personal loans, whether it be a home loan to individuals or personal loans and vehicle loans, which people buy for buying cars, etc. And there is a reasonably healthy growth, both in the banking system and NBFCs, which for industry, I reckon it is somewhere above 12 to 14%. Some banks are doing even better. And this now in most of the banks, they have realigned their books in such a manner that corporate, even in the public sector banks, now corporate is down to about 35%, just
Correct.
over one third, which is the mid corporate and the large corporate. The rest is this individual retail plus MSME plus agriculture. And individual retail is actually the largest piece. Even if you take SBI, which is the largest bank. So that is about, I would think, 40% or whatever. And the remaining 25% comes from agriculture and MSME. Now, this 40% is growing at a reasonably good tick, depending on the way the economy is shaping up. Now, the other two, agriculture and MSME. Agriculture, I think, has been reasonably all right this year, because the monsoons have been favorable. There have been one or two, varying kinds of rain happening in different parts of the country, which has impacted but this has been one very good year for crops. And therefore, reasonably healthy growth in agriculture. I would think it should be ending at 9 to 10% for the industry. Now, MSME and corporate, these are the two things that we are left with, and both very crucial in terms of industrial growth and for the economy. Now, MSME, there has been some growth in COVID times, which has been basically upon the government-related and RBI-related mechanisms and schemes that were given. So bankers were very proactive last year. We've discussed that in our previous interaction. Correct. Bankers have given on their own 10% extra line. Then the government came forward and gave that 20% emergency credit line, and that was availed to a reasonable extent. So automatically you had some element of growth. But at the same time, it has not been as high as anticipated for two reasons. One is, as you know, the MSME sector is the most impacted due to COVID. And even before COVID, it was very badly impacted for various reasons, starting from the days of demonetization, etc. And, because they are impacted, earlier their access, I think, to getting funds from banks and NBFCs were relatively easier before the stress started in the banking system. Now, banks and NBFCs are themselves very, very cautious, about lending to them and making sure that they also have their cash flows in sight, how they are managing they are not over leveraged and things like that. So MSME is a bit of a slowdown. In corporate credit, for example, for the large banks, it's still almost flat or negative. Now, what the bankers have been saying in their investor calls, as also, in their media interviews, are that two things are happening. One is, naturally, there is now an option to go beyond only pure bank credit, right? So you can, if you add up the non-convertible debentures or the CPs and all that these companies are raising, then, and if you add that to the bank credit, then the growth is not that insignificant. It's not negative or -1% or +3%. It may well be about 5-6%, even in the corporate book. But the other thing that is happening in corporate is that the infrastructure projects are now coming back, right? And there is a lot of pipeline. But as you know, infrastructure projects, the disbursement doesn't happen in one go. It is spread. The disbursement itself is spread over their ability to complete a phase of the project, and it will happen. So the overall sanction might be for a very large amount, but the actual disbursement may happen over a few years. So given all these circumstances, corporate credit growth is the one which is pulling down the overall credit growth rate. And my sense is that this will continue for some more time, a few quarters. But retail growth, especially home loans, which is the largest segment of the retail credit of the banks, that is growing at a very healthy uptick. Projects are getting completed whichever part of India that you go. I'm right now in Calcutta. I've come for some work. Here also, the local media and all, they are saying that there is very healthy purchase of flats and stuff like that. State governments have given a lot of concessions. They come in handy for stamp duty. They have given stamp duty concessions. So that is looking good. Personal loans, of course, people are getting back to work. So once again, consumer durables, etc., are picking up. So overall, I think, the big banks, the commentary that they have given is that for the year as a whole, all of them are saying at least they expect to grow between 8 to 10%. And as you know, there are some private banks which are growing faster than that because the kind of corporate growth or corporate lending that they do is a little different. They are actually going below, they are comparing the corporate credit that they extend to the market rate, the repo rate or the reverse repo rate. So where they would get even less. So they just want to deploy the funds, so they are willing to take a call on, and if the corporate is AAA rated and one of the blue chip companies, they are also willing to, it's like borrowing from the money market rather than taking credit, which is why some banks are growing their corporate book. Otherwise, it is like this.
So overall, would it be right to say that on the back of the lower credit offtake that we are seeing, banks are actually trying to pursue, or, that's pushing banks to pursue credit growth at lower yields, which in turn would actually impact their net interest margins going ahead?
No, I don't think that will happen because that way the banks are very wise. The ones who are lending to the corporates, it is that, they may have, because the liability uptick is very comfortable, right? Which means deposits are coming in handily. So they need to, so the choice is between placing it in reverse repo or placing it in the short-term money market and earning X rate of interest. Rather than that, they are keeping a spread and lending at 0.20 or 0.25 25 basis points over that to the corporate. Now, that is not the normal corporate lending rate, but they are doing it. It's like parking your funds with a corporate, which is almost risk-free, rather than parking your funds with another bank or something like that. So the margins will not get impacted. In fact, margins, they are doing it to protect their margins so that, whatever surplus that they have, they are able to deploy this. That's the
right. And what would you make of the asset quality then?
Asset quality, see, the reason why banks are expected to do much better, and we had, I think, a reasonable amount of discussion in one of my earlier interactions with you, is that, the entire problem that hit all the banks altogether, all the corporate facing banks, public sector, everyone was in corporate lending, and in private sector also, the ones who were, in a big way in corporate lending, like ICICI Bank or Axis Bank, everyone suffered and they had huge NPAs. The reason was that the high amount, the higher turnover corporates, they came into difficulty. If you look at Indian banking history, most of the time it is the larger corporates, they would belong to blue chip groups like the Tatas and most of them, and they would be able to, manage things. Mid corporates would get into trouble. Post, I think, 2005 or 2008 onwards, there were a larger number of people who suddenly started having very high turnover, sales growth, revenue growth. They became large very fast, and they were in either in infrastructure industries like power and all that, or in industries which support them, like steel, cement, this, that, and all. And they became very large companies in a very short period of time. And the prognosis was that India is now growing at a different kind of pace. We will outstrip China, and this and that will happen. And banks got into that mode, and in a way, you can use the word mode, into that trap, thinking that the economy would grow so fast, these companies would also grow so fast, and therefore our loans will do well, and we will be able to also grow our book without much risk. But that's not how it turned out. We have had a slide in our position right from 2013, 14, I think, and we really never got out of it. There were 1 or 2 years in between we did well, but the last 2-3 years, and even before COVID, now we are talking of negative growth in the economy and all. But before COVID, India grew at 4.7%, in 2019-20, which was, I think, the lowest in the last 20-30 years. In that scenario, what happened? The stress built up on the corporate book, which was the large companies. If they start defaulting, then it immediately impacts your balance sheet. It impacts your gross NPA ratio. They shoot up. Smaller companies, MSMEs, agriculture, they were always, in some difficulty or the other throughout history. And banks were able to manage that. So if you have high NPA levels in only MSME and agriculture, and low NPA levels in your corporate and individual retail, your NPA, gross NPA, will never cross 4 or 5%, which is right now the case. So what happened because of that corporate delinquency of, say, between 2012 and 2017-18, that 6-year period, then we had to have a massive cleanup done from 2017 to 20. Now that book has virtually got cleaned up. Cleaned up means either they are off the balance sheet or they are provided for. And new fresh loans that the banks have extended to corporates, which is why the credit growth has slowed down. Either there is less demand from the corporates, or the banks have been much more, they have learned their lesson from that period, and they are much more wiser in the policies that they have to extend high value corporate credit, whether it is project finance or infrastructure finance. And therefore, going forward, if you don't have that much of corporate stress, I don't see the bank's books, whether the profitability or the NPA or the balance sheets, being as stressed as in the past. Of course, COVID has had a huge impact. So there would be some impact of that. But the banks, I think, will be reasonably comfortable. Most of the big banks are now at net NPA of below 3% or 2%. SBI, I think, is already down to 1.5. And private sector banks, of course, have even, HDFC and others have even lower. So I don't see that changing very much in the next 1 or 2 years.
Right. And very lastly, over all of this, the way growth has been panning out, the way inflation has been panning out, what's your view with regards to what the MPC will do? Do you think there is a possibility of a change in stance that could be coming in? Do you think they will look at now pulling out liquidity, or because, we're already looking at a Omicron that's coming in, they will be cautious about it and maintain a status quo?
Yeah, so this is really, both of us, I think, in a way, are in the same boat. We are not the real experts. The experts are those who are in RBI. But we can only do some, guessing based on what they have been doing in the past. Now, if you look at that, RBI is trying to play a very, very fine, and they have done very frankly, I think, done a very good job of it, of playing a very fine balancing act between containing inflation and giving impetus for growth, right? So in the normal course, if this is a very recent development, no, Omicron and all, if Omicron had not been there, and it would have been otherwise, second wave, of course, has taught us that you should never predict.
Correct.
But having said that, because we are now much better vaccinated, 50% of the adult population, even in India, has now been vaccinated. And most of the others, I think, have probably got infected with COVID, even if we don't know. The secular trend without this Omicron coming in would have been expected to continue. And in that scenario, I think RBI would probably, because inflation is a cause for concern, it is going up and down, but it is in the higher trajectory, and inflation impacts the common man. So RBI would probably have not maybe changed anything on the rates and all that, but they might have at least may have thought of changing their stance. But purely personal, we don't know what would actually happen. My sense is that they may not, given Omicron, they might say that because of that, we will hold our horses till more clarity comes out of Omicron, and then take a call maybe 1 or 2 months down the line. See, this 2-month business is only a convention that they are now following. In the old days, they used to do it. It was twice a year. And which I feel, frankly, is a much better thing. What will change in 2 months? You don't know half the time what is happening. Although now data is available, should be available more easily. But because of this 2 month, everyone gets very excited. But then you must remember that RBI always has the powers to, in COVID times, they have intervened even in between. So they can, if something happens. So I think it will be the secular trend is that they want to balance inflation and growth and yet maintain financial stability. This is a very clear understanding that the present governor has given. There is no one-sided kind of thing. And this one, I think it's coming out when on it started?
No, yeah, it started today. So 8th will be the policy.
So let's see. We'll just get to know in 2 days' time.
Absolutely.
But I don't think that also whatever they do will really have any impact. But on Omicron, again, everyone speculates, and I'm not even a doctor. But somehow I think the world reacted. It's good that they reacted. So everyone should be alert. But I think the reaction is more because of what happened in India in the second wave or elsewhere. While it is definitely probably more contagious than the current whatever is floating around, but it doesn't seem to be adding to, it's not more deadly, or it's not making more people fall sick.
Yes,
yeah.
Absolutely.
So actually, in a way, could be a good thing, because I read somewhere, doctors have been saying that when the virus will finally abate, it is at that time they try to continue to infect more people, but they necessarily need to therefore reduce their potency. And Omicron variant could well be a reflection of that. But it's too early to say.
Probably it could be an endemic to the pandemic. That's what a lot of doctors are saying.
But they are always, and the right thing to do is always qualifying it by saying we still don't have enough data. So this broke out on 24th of November. So my sense is we'll need this entire month to play out.
Understand.
What is the impact across the world, especially in the developed countries, those which are in the northern hemisphere. They have their cold and flu season when things become very bad. So in December, if things really, and Christmas is coming when, people, they don't congregate, but they meet each other. People, the family members go from one end of the country to another, and they meet each other. If in spite of all that, there is no such sharp spike beyond what has already happened. Europe has already
happened. Correct. I think that will give us some indication.
I think immediately the doctors will start pronouncing something more positive, and it will come down. And if there is bad luck, of course, we just.
then we have to deal with it.
Yeah.
All right. Thanks a lot, Mr. Basu. Thank you so much for joining us on the show. As always, a pleasure to speak to you and get insights from you. Thank you. Stay safe and speak to you soon again.
Thank you, Hiral. Pleasure always
Thank
to
you.
be with you. Thank you very much. Thanks.
Subscribe to our YouTube channel for in depth interviews of India Inc. and press the bell icon so that you do not miss our updates.